Awesome. We are live. Hello, everyone. Hey, dear audience in front of the screen. Welcome to join us tonight. My name is Jay. I'm currently the Director of Operations and Partnership at Lair Labs. If it's your first time to join our event of LE Connecting series, welcome. And if you have been our previous events and this return, and we really appreciate your support in the past few events, and welcome back. So tonight's event, FinTech Trends 2021, how COVID-19 has shaped the industry. We're great to have a few great speakers. Before I move into the intro, those speakers to the stage, I would like to quickly give more context about the event series and who we are. So Lair Labs, we are a startup accelerator based in New York State, and New York City that empowers founders to expand internationally. Each year, we accelerate 8 to 12 startups through our specialized program and the capital investments. In the first 3 years operation, our portfolio companies have raised about 30 million funding after completing our program. And it's a great honor. And moving forward, we are looking forward to help founders throughout global, and we are founders supporting founders. So in the beginning of the year, when the pandemic came in, a lot of founders really struggle and to find different opportunities, platforms, because all the offline situation and system got kind of dimmed down. So we launched Supernova 2020 as a way to connect global founders, to help them to connect resources in both Asia as well as North America. So in the Supernova pitch competition, we connect more than 1,000 startups, and through different 5 pitch sessions, invite 20 plus VC judges joining us with a total of online views, more than 20,000 audience joining us in both the Asia and the USA. So to continue the momentum, we launched LE Connecting, which is a community through events focusing on providing constructive value and knowledge to young professionals and the startup fans interested in VC tech fields and the founders seeking resource and opportunities. It comes with 2 parts, connecting new era and connecting diversity. So in the Connecting Diversity session, which is our first event, minority founders and investors, as well as tech executives and entrepreneurs with an international immigrant background, will be invited to the stage and join together to address certain topics aiming the current political landscape, as well as share personal experience as a minority in the startup and tech. And in Connecting New Era sessions, top industry professionals from the startup and the VC world will share firsthand insights and expertise with founders, startup fans, as well as investors looking to pivot, aiming at COVID-19 and post-COVID-19 and the future. So in the past few events, we have invited a few great, amazing VC partners, CXO from top leading unicorn startups, growth stage startups, as well as the emerging founders from both the West Coast, East Coast, and the founders of YC as well. So tonight is actually the 5th event of our LE Connecting New Era for the 2020. And we are really great and happy to invite 3 amazing speakers joining us who have rich experience in both fintech and finance and product design field. So before that, I would also like to give a special thanks to our media partner, FinTech Sandbox, which is founded in 2014. FinTech Sandbox is a Boston-based nonprofit that helps fintech startups build great products and provide critical data, access, and the development resource to fintech entrepreneurs around the world. So I will tune down the intro here, and welcome to join us again tonight. And before I give the mic to our tonight's speaker and moderator, I would like to quickly go over each one's background. So first, I would like to introduce Sheng Xu. Sheng is currently a vice president at BlackRock and has over 8 years of diversified experience in different fintech products and investment strategies across various business functions. In her current roles, Sheng partners with BlackRock's senior leadership and the C-level executives to drive a strategic project for BlackRock's investment on the trading platform. And Sheng was also a member of BlackRock Solution and managed several external clients' business for BlackRock's fintech ecosystem. And next, I'd like to introduce Yang Xu. Yang is the CEO of the Trading Farm, which is a white label customizable technology platform built expressively just for IA registered investment advisors. He is also a partner at Up FinTech Holding Limit, which is a NASDAQ listing company, an international broker-dealer group backed by investors such as Jim Rogers Interactive Brokers. He's also the CEO of Up FinTech Asset Management side. Yang has over 10 years of hands-on experience in advisory tech, factor investing, as well as ETF operations, and played several very important senior executive roles at Alpha Architect and Capital One as well. And the last, I would like to introduce Mark Lam. Mark is currently the Director of Quantitative Research at the YieldX. He was a Vice President at BlackRock, where he led asset analytics at Aladdin and the BlackRock's investment research and the risk management platform. In that role, he was responsible for asset-level analytics, tools, and the models for the system. Mark has over 9 years of experience in fixed income markets and the quantitative risk solutions. So again, welcome Sam, Yan, and Mark. It's a great honor to have you guys join us tonight. And now I'd like to give my mic to Sam, who's also going to be the speaker as well as a moderator for tonight's panel discussion. Hi, Sam.
Thank you for the invitation, and really happy to be here tonight. I think it's my great honor to join two of the most inspiring young leaders in the industry that ever since 10 years ago I joined the industry. So Mark Lam is actually my fellow BlackRock co-worker, happened to be my second year actually. So a lot of lessons teach and learn from Mark. You don't know how smart he is. So it's a great honor to hear his insight on industry tonight. While young, more than ever, we know even a little bit earlier than Mark. We were actually students together when we were in graduate school in United States at Philly. So really happy to see your great achievement in the past 10 years. You have been in many angles in the financial and asset management industry. And until now, you have been raising a few new companies, which are very inspiring. So I'm really happy to drive the conversation here together with you. And we're gonna probably start with a few prepared questions. And with that, we actually gonna break that into 5 mini sections, which you're gonna learn a little bit later. Then after that, we will have the chance and time to take questions from all audience. So in case you have questions, feel free to ping or chat in the side box. And then we also have some pre-collect questions that we will try to address at the end of the panel. With that, I want to open up the first mini session. I have a question about FinTech. For folks who are not familiar to FinTech, in one sentence, how can you explain what is FinTech? And with that, I'm gonna give you 30 seconds to think while I'm gonna read a pre-prepared question and answer. I'm gonna read out my answer. So FinTech stands for financial technology. And it is the technology and innovation that aim to connect with traditional financial industry and method in order to deliver financial service. That's a good point of being moderator. I have to prepare the question and know the answer. With that, I'm gonna hand over to Mark and Yan to share your insight.
Sure, my one sentence answer, FinTech is the next generation of financial services.
Okay, that's pretty good. I think to me, it's empowering finance via technology.
Okay, wow, you guys beat me sharply with your clear and straightforward answer. With that, actually, we want to know a little bit more about yourself. How did you get into the industry? And if you can share like 1 to 2 minutes background on how you stepped into FinTech industry, that would be great.
Would you like to start?
You want to go first?
Okay, sure, I'll go. So for me, without really realizing it, I spent my entire career in FinTech. I have had the opportunity of experiencing completely opposite ends of the spectrum. So I started my career at BlackRock, which some of you may know, it's the largest asset manager in the world. And then I currently work at YieldX, which is a company that was just started last year. So just to put it in context, it's going from something like 20,000 employees to 20. And you know, I went from doing managing analytics for some of the biggest banks, government agencies, insurance companies in the world, to essentially building a fixed income platform basically from scratch. So, you know, reflecting on that experience, I would say I probably spent most of my time at BlackRock learning the business logic, and most of my time at YieldX learning the technology and leveraging that technology to come up with new solutions.
Great. And Yang's turn.
Yeah, I think we have a similar path to Mark's. I've always been in the finance industry. He's got a bachelor degree of finance and a master of science in finance. And after graduation from the graduate school, I went to Capital One and I quit Capital One job, went back to Philly, started an asset management firm with a couple partners. That's why I'm always in the finance industry. But in the recent years, especially starting from 2013, 2014, technology starting to boom in the finance industry. Kind of first started with the robo advisor in the kind of particular area I was interested in. It's the robo advisor means these Silicon Valley technology firms trying to disrupt the traditional human-based advisory industry by providing everything from model portfolio to CRM to onboarding, paperless onboarding, all online, no human interaction. That was the first kind of threat to our traditional industry, but that was where I learned, I was exposed to the FinTech industry. So we're trying to leverage everything that we could learn from our competitor in order to stay in the game. That's where I learned the power of technology, especially using technology to empower, to sharpen our existing practice as a human advisor, because I don't want to be revolutionized. That's why I joined the technology, to improve ourselves, not to be revolutionized.
Got it. Totally. And with that, I want to echo what Mark and Yang shared in our first question. What is FinTech? It's the next generation of financial service. Actually, it's really, really hard to see any financial today that is out of technology. We are like no longer with the traditional life we lived in like 20 years ago. When I pick up a bank check or deposit a bank check, I need to ride my bike to BOA and then like just physically deliver that. Today, you just take a picture and you can deposit a check. That's how financial technology are really, really involved in our day-to-day life. So that actually going to bring me to next question. How do you think financial technology is impact our life? With that, Yang's turn to start because Mark volunteered last round.
All right. I think right now everything's mobile-based, right? We're so used to these solutions. Everything at your fingertip, from trading to buying a kind of product from Amazon or delivering food to your doorstep. We're just so used to that, but I think to me, I'm just so used to it. I don't see any, well, I guess I'm just living a really good timing right now because everything's mobile-based, but to me, the impacts to our customer. But I've seen a pretty significant impact to our customers who are traditional advisors, especially when the pandemic hit. Right. So before pandemic, you can still meet your clients in your office. You could still do paper-based onboarding. You could walk your high net worth clients through a complex model portfolio. But when pandemic hit, you couldn't do that anymore. Then we see a lot of these customers try to reach out to us. They wanted to be able to streamline their operation, be able to maintain a good customer service, be able to run their business without seeing the client in person. I think that's a pretty big impact to these traditional advisors. Now they realize, we got to invest more in these technology solutions. Otherwise, what are we going to do in the future when another similar situation, another similar event hit, and they couldn't even respond to a simple customer request?
Yeah, I think that really speaks to the idea when I say it's the next generation of financial services. I think a lot of people think of FinTech as a pretty new industry, right? It's a brand new industry with new opportunities and new people, and I think this to a large extent that it's true. But I think financial services as a whole just has to transition into what FinTechs are doing. Any company that doesn't do that as a traditional financial services company just probably isn't going to exist years from now. My view is that FinTech is really just an evolution. It's all of the traditional roles that you think of when you think of financial services. You have your banks, you have your insurance companies, you have your wealth management companies. But there's just new ways of doing things. There's easier ways to engage, lower barriers to entry, and that's really what FinTech means to me. It's sort of leading the way for the next wave of financial services. And then maybe how I see it changing, or how I see it impacting us, specifically in America, is I think traditionally financial services plays a bit of a behind the scenes role. Kind of like the pipes in your house, infrastructure stuff that money flows from one place to another. Like you swipe your credit card and somehow somebody gets paid, and then you get a bill from a bank or whatever. I think that's already played out to a large extent. A lot of the companies like Stripe and Plaid and other payments services have done a phenomenal job leading the way in FinTech. But now you're starting to see more of the areas that touch your day-to-day lives directly, and people starting to innovate in those areas. So you've got your personal finance companies, you've got Betterment, you've got Robinhood, and many other client-facing apps that allow you to do financial services stuff on your phone. And I think the next wave really for the country is probably going to come from some of the more tightly regulated sectors. So you think of banks and insurance companies that have to meet all kinds of regulatory hurdles. We just saw not long ago, Vero Bank got certified as the first digital bank to have a national bank charter and to accept FDIC deposits. That's a big win, and hopefully again paving the way for more digital banks to become fully FDIC insured. And then before you know it, we may have many digital banks as consumers. So that's how I see the evolution of FinTech impacting us.
Got it. Very, very structured answer. I was expecting something I'm gonna say in a bit, is that how did FinTech impact my life? Well, I got to use Venmo to split the meal payment now. So that's how it's impacting you. You actually see it the day over day, and more than frequently than you think you are involved in this industry. And with that, actually, it's gonna naturally bring us to our next mini section, talking about FinTech market and trend. And then in this section, we want to really discuss what does traditional financial firm facing in a FinTech challenge? What are they trying to do? And together, we're going to talk a little bit further on the startup driving segment in FinTech, which Mark kind of like already covered everything. So we might skip that one when we go there. And then eventually, we will jump to the last round, which is really talking about regional and global trend we're seeing. So with that, first question is really, we are relatively familiar to traditional financial firm. And actually, many of them are actually trying to build some technology of FinTech ecosystem infrastructure through either build them internally or buy them through M&A and some other resolution. So with that, I want to hand over to Mark and Jan to talk about how do you think traditional financial companies are facing the FinTech challenge and what they're trying to do.
Sure, I can take a stab at that. So when I think of a traditional financial services company, you think of, as I mentioned, the large banks, insurance companies, asset managers. I think traditionally, there's just been a lot of frictional forces in interfacing between one institution and another. So, a bank is originating loans, right? They take your deposit, they originate loans, personal loans, mortgage loans, and then they need a way to basically hedge that risk or to offlay that risk with others. So then you've got, a TBA market, or to be announced market, where they, place commitments to mortgage loans out in the securities industry, and somebody else in the financial services market takes on that risk. Now that they have that, you've got asset managers that are managing, books of TBAs and TBA options, mortgages, whatever. I think that whole process has lots of handshakes and exchanges that requires a lot of translation, and just traditionally there's been a lot of frictional forces in that. And there's just one example of the many, financial services, I think, is unique in how many micro industries live within one industry. And there's just a lot of frictional forces, passing information from one to another. So that I think is both the reason for FinTech, because there's a lot of opportunity to disrupt these areas of traditional friction, and also the reason why I was saying large companies today have to become a FinTech company in order to survive the next wave. We've moved to a world where you're no longer doing monolithic things, right? You no longer have one institution that does every single thing for you. And if they did do every single thing for you, they probably wouldn't do a great job at every single thing. And it's become more apparent than ever before that you can simply, do a Google search and you can find a better high yield savings provider. And you just move your money, from one account to another, a few clicks of a button, and you're all of a sudden getting, 50 basis points more on your savings. So that I think that is kind of where I see things going.
Right. So I think Sheng's question is pretty broad, right? Financial services firms, and it's hard to structure a good answer to that question. So I think that I like to maybe narrow it down to probably a couple different types of financial services firm I'm familiar with. For example, Trading Firm is a B2B, business-to-business technology platform. We serve these registered investment advisors. They either register with SEC or they register with their states. All these investment advisors, they have to work with a certain type of custodian, right? I.e. broker-dealer. They could work with Schwab. They could work with TD Ameritrade. It doesn't exist anymore, right? It was acquired by Schwab. Or they could work with Interactive Brokers. They could work with LPL, but they have to pick a custodian for their clients' services, i.e. holding the security, execution the trades, and opening separate manager accounts for their clients. There's a lot of merger acquisition going on. I mean, it already happened in the last couple of months in the US on the custodian side. Schwab bought TD Ameritrade, right? And Morgan Stanley bought E-Trade. And Goldman Sachs bought the Motif and Folio. Why this is happening is because number one, everybody's doing commission-free trading, right? Robinhood started a couple of years back, but it was not until last year in September, all these traditional broker-dealers in the US, they gone crazy like commission-free. Right after that, 3 months later, the pandemic hit. What happened? The Fed fund rate dropped to almost zero. So right now we're in pretty low yield environment. But these are the two major revenue streams for these custodians. They need to make revenue based on commission. They need to make revenue based on the Fed fund spread, right? The difference between the money market fund and the internal cost of their capital. Now these two revenue streams are gone. So what can they do going forward in order to maintain their profitability? I think technology plays a pretty important role going forward. They can help these big custodians to save costs, to help them streamline operation. And more importantly, they can do a better job to segment the customers by using different technology solutions. Now they can use technology to serve the customers who are not profitable for these big custodians. But right now, they could use a zero human interaction, online-based solution, maybe model portfolio to these lower income customers, lower net worth customers, because these customers, they don't require human interaction. They couldn't do that. This custodian couldn't do that 10 years ago. But going forward, they have to go direct to consumer. So that's the next revenue stream. by going direct to consumer, by using technology solutions. And that's the next kind of big trend I see.
Totally, and great point from both Mark and Yang. And you actually kind of like already addressed a lot of the upcoming question, which is really break the industry down into what are the key segment we're seeing that folks are trying to reach out directly to the customer through FinTech innovation. So actually, they're major, like mainly four segment with a lot of like detailed downstream like bucket. First is banking and capital market. And I think what Yang you're working on definitely are very relevant to that bucket. While also in the banking capital market, we can see things like demo, money transferring, a lot of related fintech company. And another one is investment management, which I think, Mark, you have a lot of experience. And I think what you're working on right now, to some degree, are more analytical driven, and it could be still bucking back to investment management related, and together with some capital market as well. And then we also have insurance and real estate. A quick example on real estate. Due to pandemic, folks no longer can meet face-to-face to close their housing buying demand. You don't know how strong demand it is on the market to closing things like virtually. So it kind of like push things to go through a direction that normally might take a while to achieve. People have to change their habits. And with that, actually, I do want to talk about trend. With and without pandemic, what are you vision the regional and global demand around FinTech segment of FinTech whole industry? With that, Mark or Yang.
So I think, the trends that we're seeing, and these are very specific to what I'm seeing in my seat at YieldX, are, as I mentioned, we're building a fixed income platform. I think the fixed income markets, are probably some of the most archaic, markets, around. The big trend really, I think, has been electronification of bond trading. So more and more bonds are, you can trade electronically, not just treasury bonds, corporate bonds, potentially other types of bonds as well. And that's really enabled, during the pandemic where people were actually, able to perform most of their work, trading bonds or things related to trading bonds from home. I think that is a pretty big trend within the fixed income market. In terms of opportunity, that's something that I think YieldX we certainly seized on. We offer a variety of products that allow you to buy and sell fixed income products. We have something we call Asset Explorer, which I think of as essentially a search engine for fixed income assets. And essentially, you go to an app, you search for a certain type of fixed income product that you want to buy, and it shows up. And then, you have a bunch of options, right? A lot of people don't know this, but you have one stop for a company, say Apple, but Apple has hundreds of issued bonds, right? So how do you choose if you want to get into Apple, and you want to buy some Apple bonds, how do you choose which one of the hundreds of bonds to buy? That's what the search engine is for. It'll show you everything that's relevant, how they compare to each other, how they compare to their competitors. And now, because of electronic trading, you can basically just click a button and it's there, right? You've got the bond. And every time you come back, because of other technological trends that have happened, like everything's moving to the cloud, we've got lots of machine learning algorithms that are pretty much prepackaged and pretty easy to deploy, where we can come up with customized views for how your bond price performed over time. So there's always up. It's funny when I think about this, but traditionally, if you wanted to see a report on your portfolio, you have to wait till next quarter, or at the very best, at least where I've been at BlackRock, you'll wait till 6 a.m. the next morning, where someone comes in at 6 a.m. and runs a report for you. and then you get to see it, right? So that's the frequency of which things have changed. Now it's click and go, so I think just in general, like these technological trends have really empowered companies like ourselves to really come up with next generation products that just were not really envisioned of prior to where we are today.
Great.
Yeah. To me, I think number one, financial services industry is a highly regulated industry, right? We know that because we've been working in this industry forever. My point is, right now it's really hard to create something innovative these days. Because a lot of things happened in the last 5 to 10 years, especially in the last 5 years. And just starting like firms like Mark mentioned, Ross from Robinhood, Betterment, these firms. And like, for example, and also Mark, you firm Yeldex. And the firm that we started trading from, we're just trying to, right now, we don't say, hey, we want to create value to the customers. It's just too vague of statement. We're just trying to see, hey, if you really want to make an impact to the industry, find a specific segment of that industry, the customer. Make sure you do a pretty precise segmentation on the customers that you want to track, and then deliver clear messaging to that segment of customers. And the rest would be, hey, let's try to improve the current process by using a better technology, by putting the pieces together in a better and a more efficient way. Just my first-hand experience. It's really hard to create something entirely new while it complying with SEC, FINRA, all these regulators' rules and requirements. I think that's just really hard to do. And not to mention that some of the customers are also regulated. For example, our customers, the RAs, they are regulated by the state, by the SEC. They have a fiduciary duty to pick what kind of software providers they have to work with. They have to do due diligence on vendors. They got to check all the boxes, cybersecurity test. So it's really, really hard to create something entirely new and innovative. Because to us, we just say, hey, we're not the smarter guy in the industry. Let's try to put all the pieces together in a better way. That's it. And let's try to get rid of all the paper-based process. Let's try to, streamline the process from 10 steps to 2 steps. That's good enough for us.
Got it. And actually with that, I want to echo what Mark just mentioned earlier about portfolio reporting. Both of us should be very familiar to that. And I want to leverage one example we always use to demo how things has been changing. Traditionally, if you think about financial reporting as Wall Street Journal, it's printing out every morning and you have to be in the factory to receive the data and then make sure all the machines are publishing them. But nowadays, the way we get data are more dynamic or real time, and the industry are kind of trying to push from that angle. Now you can more see Wall Street on app version. That means you can do more customization to combine different column, the reporting data you want to see, and then you can do really your own combination. So from Wall Street on the paper to Wall Street on the app. I hope Wall Street don't mind I use them as a sample just because we're very familiar with Wall Street Journal. With that, I think both of you actually mentioned also about our next mini section about opportunity and change. I want to expand the conversation a little bit further to talk about how you think really a pandemic or potentially a recession gonna impact the opportunity. It could be like you think there is an impact, or it could be there is no impact. And then it could be specific around some sector or segment. So with that, hand over to Mark and Yang.
So I think there's certainly been lots of impact, right? Like it would be foolish to hope that there would be no impact. We've seen very real sectors in the economy, shrink significantly and then recovered a bunch since. So hopefully, with news of a vaccine on the tails, and with improved testing and just improved social distancing and things like that, the impact will be much less than originally expected. But specifically for FinTech, and maybe for financial services in general, I think what we've seen like across the board is corporations are holding onto cash. They're uncertain what to do with that cash, and they're holding onto it. And it's unfortunate because at the same time, the Fed has been slashing rates lower and keeping them low. So we've got a lot of cash and very low yields. So what do you do with all that cash if they're not yielding you anything? Well, that's kind of the value proposition of the type of things that we're doing at YieldX, where you can deploy your cash quickly in higher yielding products that are extremely liquid, and then dispossess them quickly if you need to get the cash back. Stuff like that I think are where the opportunities are. There's also the case to be made that there's been a lot of investments made because they have all this cash, and more people are working from home. So technology has become more important than ever. So with all this cash and nowhere to really deploy it, I think we also see corporations investing cash in acquisitions or new products and services that empower the people to do more things with newer technology. So yeah, those are I think are the opportunities and trends that come across from COVID.
Got it.
Yeah, I agree. There's some huge impact to our daily life, to the business model, to the everybody still operating the business. Like I said, I think it mentioned before, a lot of advisors, they couldn't handle the no human interaction, no office visiting. Now they are getting used to that. They could do Zoom. They could just send an electronic account opening invitation to their clients. Everything can be signed, sealed down with all electronic signature timestamp ready for the regulator in the future. That's pretty streamlined these days. I think opportunities that I see these days, definitely the yield, cash management, that's key. We're in a zero yield environment almost. Tons of cash in there, ample liquidity. All these advisors, when they manage the client's portfolio, they can't just leave the cash in there, right? Well, if the cash leaves in there in the account, why should I pay you 1% management fee on an annual basis? They have to do something. And when they do something, the market becomes pretty volatile, and the clients lose money, and the clients not happy. So they need to find stable, steady income, especially for those clients who are kind of elderly clients who entering the retirement stage. That's huge going forward. But to us, well, we are right now a technology platform, and I talk to a lot of clients and also a lot of other friends who are trying to get into the industry that they see opportunities. But I think from a business perspective, that yes, you do see a lot of opportunities there because the pandemic, because these lockdowns, working from home. However, you need to have scale in order to be alive when you run the business. It's hard to have scale these days because all these big firms, big banks, big investment firms, big custodians, they have the service that you're trying to provide. Maybe it's not as good as you provide, but they do have it, right? It's hard to educate, or it's hard to deliver your messaging to the customers you want to attract. And also, secondly, you need to make money by providing the technology to those customers. Well, a lot of things here are free, they're quote-unquote free, right? Even though it's not real free, but everybody marketing a free trading, commission free, and free technology. So you're facing a pretty severe competition. I think one advice piece of advice from us is that just make sure that everything that you see, the opportunity you see, make sure you can charge some kind of fee on that by providing a technology solution to the customers. Otherwise, this is hard to sustain. I mean, yeah, it's an opportunity, but it won't be an opportunity that can scale up.
Got it. Great. And I think we kind of all agree that fintech industry sometimes have certain amount of barrier to break into. Either you need to have something really amazing on technology, or the whole financial model might be very outstanding, or you have to combine both. With that, actually perfect timing for us to talk more about product and business model later. So I do want to start with product. Mark and Yang, you both are creating amazing product for the industry and for the market. I want to ask that, how do you think your product is standing out in the market, and what are the quality you think is needed for a product to stand out in the market? So with that, Mark or Yang?
You want to take a stab, Yang?
Sure. I think the key lesson and then key experience is that from us is focus. Like I kind of iterated before, it's hard to create something that entirely new, and also it's hard to create something that can serve all the customers in the market. So we're trying to find a structural opportunity. Right now, because the business we're in, we see a structural opportunity where these custodians are buying each other. There are so many smaller advisors are left behind because the merger acquisition of the bigger custodians, because they're small, nobody wants to work with them. Hey, I came from a small independent advisor. I know how hard it was. So we created a platform expressly for these smaller sized advisors. And we provide them cool functionalities at affordable cost. We don't tell them, hey, we can do everything. That's just impossible, right? We tell them, hey, we can provide you onboarding, we can provide you trading, we can provide you a mobile app, we can provide you reporting. That's all you need when you start your business. Don't worry, don't chase those like best and breed, services that you don't need. You end up paying double fee to them. Just work with us. When you grow to 200 mil, 500 mil, you can leave us. That's fine. But hey, when you grow to 500 mil, we'll be growing too. So we'll be ready to serve you. That's our key lesson, right? And if you do not adjust yourself to that business kind of decision, I think if you're trying to build everything overnight, that's just impossible, because everything you're trying to build have already been done by somebody else. You have to build a better way. And given the scope, the limited resources, you have to pick and choose. The key is just a segmentation.
Got it. And actually, I want to definitely agree that focus is really important, and to be a little bit dynamic to what the market needs is also important. With that, I know, Mark, you are doing something really, really focusing. You have been one of the fixed income expert I know for the past many, many, many years. And I know you're still doing some amazing creation over that angle. With that, maybe you can talk about YieldX and Bond House, about how you make that product standing out.
Yeah, so maybe to your surprise, Sheng, we've actually iterated multiple times on what the product should be. It wasn't always an extremely focused product, and I think that's just something that is part of being at a startup, and it's exciting to be looking at new problems and come up with new solutions every single day. How do you make a product stand out? I think in this industry, I think the most important thing is understanding the pain points. And at least I think for many of us, like, we've had the opportunity of working in industry for a while, and experiencing what's normal, what's good, and what's not so good. So for example, products that we have at YieldX, we have something called Best Fit, which is basically creating a best fit portfolio for you, given like your preferences. So we fit a bond portfolio to your preferences. Again, similar to what I was saying before, like, this is all stuff that is one click away. Electronically trade this stuff. So you put in your preferences, come up with the portfolio, look at it, see if you like it or not, change it if you don't like it. Okay, you're ready, execute. There, you have a portfolio, right? So what pain point does this address? I think for anyone that's actually tried to buy a customized bond portfolio or a bond SMA, you'll be familiar with that process. It requires hundreds of thousands in assets to begin with. Takes weeks at a minimum, maybe months to get your portfolio finalized. Not particularly transparent. So if you wanted to see how your holdings change on a day-to-day basis, your how it's performed over the last week or so, if the markets have been very volatile, it's very hard to get that type of transparency on a bond SMA. So that's a traditional pain point that Best Fit essentially allows you to do in one click. And it's a matter of time when for people to realize that other options exist than going to their traditional financial advisors and trying to get a bond SMA. Another one that I alluded to earlier is what we call InPass, or income portfolios as a service. So basically, API-driven service that gives you an income-generating portfolio. Again, in this environment of incredibly low rates, lots of cash on hand, how do you get 2%, 3%, maybe 6%, and InPass actually goes all the way up to 12% yields, right? Depending on how much risk you want to take. You're looking at your high yield savings account, it was 2% like last year, and now it's giving you like 60 basis points or whatever it is, and you're wondering, how do I bump up the yield on this this amount I have saved? Well, you are one API click away from getting an InPass portfolio, and it's highly liquid. So it's made up of the most liquid funds that you can buy. So if you don't like it tomorrow, you can sell it. So it gives you flexibility, and it gives you more opportunities that were just historically pain points in the industry.
Got it. And actually, I think Mark bring up a great point, API. Now let's talk about technology. If we have to name a few technology that you think gonna be the industry changer or game changer, what will be the technology? And I know it's really broad, but if you can share like something not like machine learning or like other than machine learning, that would be great. But I know machine learning is really popular and it's really reshaping the industry. So I will take that answer and leave you to share others.
So without getting too technical or specific here, I would say cloud-based services are here to stay. Kubernetes, is used everywhere to deploy scalable applications that auto scale up, auto scale down. I think we're leveraging some of the latest technology in indexing and searching for records. So as I mentioned, we have a search engine for fixed income. How do we do that? We use Elasticsearch. I believe Uber uses the same technology to geolocate drivers. When you have a passenger requesting a ride and they have 50 drivers in the area, how do they figure out which one's the closest and route times and all that? So it's extremely scalable, extremely like fast performing stuff that we're using to power like our services. I think it's really we live in an era where we have open source, right? And we have APIs. And so as an industry, we have access to some of the best technology that the tech sector uses. And that'll continue to change over time, but we'll constantly be borrowing some of the best technology that works for tech and applying it in finance.
Great.
Yeah, that's fascinating because we definitely use technologies and I'll try to use cutting edge technology, but sometimes it's hard to do and how to apply to these daily operation product that we're trying to create. Like I said, the clients are highly regulated, and everything that you do, hey, if they don't understand, that's going to be a problem. But I definitely see what Mark, you mentioned, those technology be used in model portfolio construction and help these advisors, help your clients get better yield and get more efficiency on that. But to us, I think going forward, we see a machine learning that technology be applied in the customer service better than other areas. Well, I personally just don't have a strong belief in machine learning in investment per se, especially in the equity investment. It's just kind of a complete black boxing to me, hard to explain to the clients and hard to apply on a daily basis. But in terms of customer servicing and in terms of the back office operation, for example, customer identity identification, that's going to help all these custodians, including us, to do a better job when servicing those customers.
Got it. And I think the takeaway really, aside of what you just mentioned, though, is that there are a lot of technology and there are a lot of financial segments to choose from, but really you want to use technology smartly rather than just adopt everything, because you want to use it to create something smart, not something to confuse further. So high-level takeaway. With that, once we have a great product, one thing really critical for startup or for a lot of business is that capital. How do we get our investor believing our product, and how do we attract customer? How do we create a profitable business model? I think both of you might have a lot to share. Maybe Yang, we can start from you. I know you create a few companies in the past, and then some M&A as target. Maybe you're targeting some other company as to be acquired. Right. I'm not sure. But I think maybe you can start from you to talk about how do we create a profitable business model in FinTech industry.
Right. Just based on my personal experience, instead of finding a profitable business model, I think I tried, but it's just hard to do. Well, I think I guess I was trying to say, you just have to make sure that you're doing the right thing for the customers and delivering value in exchange for a fee that you can charge them. I never try to go out find a specific business model. I just try to find opportunities around, the daily operations, daily practice I'm exposed to, and see where are things we can improve, where are things that we can do better, and are we missing any, pieces where the customers need, and if we do that, can we connect the customers with the other, servicing firms, so in turn we can make a profitable margin. Well, that's my personal experience, but give you maybe a live example is that when I was an asset manager, we trying to start mimic traditional factor investing, pharma French value, momentum, the quality factor investing. It's been around there for like 50 years, right? I mean, probably 30 years in the industry. It's a well-known factor. But why did we still want to get into that area if everybody's already doing that? Well, I guess we're trying to explain everything better than everybody else to our customers, and our customers bought in our philosophy. And more importantly, we survive. A lot of these factors, they will perform maybe in 10 years or even 15 years. It's hard for them to perform within a short period of time. So we survive. Survivability is key in the financial services industry. If you can survive by also delivering the value, your philosophy to your customers, I think that's the business model you should be pursuing.
Got it. Mark, do you want to echo any additional opinion on that?
I'll just add a few thoughts. I mean, how do you be profitable? I mean, that's going to vary, significantly based on, your target audience, your product, all of those things. But I think something that is applicable to generally to everyone is, profit is revenue minus expense, right? So maximize your revenue and minimize your expense. How do you do that? Well, make sure, you're maximizing your user base. I think a lot of people, especially in financial services, don't realize that the quickest way to acquiring customers isn't going to customers directly. I mentioned all these frictional forces before, right? There's a lot of existing relationships that people have with customers. There's many other ways to access your customer than trying to put an ad on Google or on YouTube and trying to access your customers. You find the right areas to scale. That's how you maximize your revenue. And then keep your team lean. Find people that are able to satisfy multiple roles, so you don't have too specialized roles, especially as a young startup. And treat your people nicely. Give them lots of learning opportunities and allow them to do many different things. And that's how you keep people happy and keep your bottom line very, very lean.
Got it. And I think, Mark, you mentioned customer base and direct access to customer. I think both of you are kind of like trying to do at this point. I do want to talk a little bit further about customer. At one point of the business, you'll have to face the fact that you need to attract more customer. So I want to check how you're thinking about the future plan of customer acquisition or your vision around that topic.
Mark, you want to go first?
You don't need to exchange material, non-public information. Just something general is fine.
Yeah, no, I don't have too much to add beyond what I was describing before. I think customer acquisition has to come from areas of scale, and that typically, at least in this industry, doesn't mean direct marketing to consumers. And I don't see that changing anytime soon. Hopefully, in one day, where we have a lot less frictional forces in financial services, everyone has their own app for their own special bank, personal finance, or whatever. All services are on their phone. Maybe one day that'll change, but I still think that's going to be the way to acquire customers going forward.
I think to me, there are only limited ways you can do it in terms of customer acquisition, right? Because we're a B2B platform. You either do outbound marketing or inbound marketing. Outbound, just send a bunch of emails out or participate in all those conferences and maybe pay for play, get customers. Or inbound, do more brand building, do SEO, SEM, and also maybe buy printed ads. These are pretty kind of straightforward methods of marketing channels, but you only have a limited resources, right? Everything needs to be discussed within a certain scope. I think, and also different stage for different firms. I think for a startup firm in the beginning, definitely get a lot of seed customers and don't get bogged down by the feedback. Get more negative feedback, as many as you can, especially in your beta testing stage, and just don't roll out unless you get 1,000 negative feedbacks from your seed customers. Just don't worry about this feedback. That's the natural stage I gotta get past. We were kind of that stage before, trying to do a secret marketing, talking to our customers, convince them to use our platform for the beta testing. And it was not until we started that we were on a platform. And when you do that, make sure you use everything you got to do a full marketing. I think that's just my takeaway.
Got it. Really interesting. And I think what Yang is mentioning here and combining what we talked earlier, if there is no pain point, you create a pain point and make sure you collect them through negative feedback.
Oh yeah, don't take my experience for it's just kind of a personal experience.
I'm just kidding, but I think that is true that you want to collect the feedback and you want to face the pain point, because if your app or the tool you're creating are having some pain point the customer is suffering from, it's very possible your competitor have something like that as well. If you face it and value that and you try to find a resolution, that might be how you can attract more capital, attract more customer, and make your product even more amazing.
Yeah, exactly. Just face the reality and just be honest. I guess that's the only way. Go ahead, Mark.
Well, I was just gonna point out, we're on this call right now. I think I've personally been, listening into many more such calls during this time of COVID than I have before, and it just stood out to me that this type of avenue is probably, at least during the time of COVID, and we'll see going forward, but a good way of getting the word out and potentially reaching new customers. So we'll see if that's a real trend or not, but it just stood out to me.
Yeah, totally. It's really not what you're facing, it's how you face it. Find a new way through a new environment and you'll make amazing. I think with that, we kind of can rounding up our five mini section. I do want to end with one final question. If you can use one sentence to describe the FinTech industry post-COVID, how would you use that one sentence? And it could not be same as your first question's answer.
Mm-hmm. It feels back to the classroom already.
Oh, that's a tough one. We got them.
Yeah, it's a tough one. I think post-pandemic, we definitely, like we discussed, we see a lot of things change, but I think, to us is, I think going forward, FinTech, especially in the area that we're working in, they just help the customer to remove uncertainties. Especially after pandemic, people just mentally, they, see a lot of uncertainties, which they did not see before, they did not feel before. just because you don't get human interaction on a daily basis. They feel insecure. They feel disconnected with the customers. So to us, FinTech maybe it's more about removing uncertainties post-pandemic.
Got it. Mark?
The best I could come up with is FinTech needs more capital. I think it's been a tough time to raise capital. VCs are, as I mentioned, hoarding onto cash. Probably not just for FinTech, but just startups in general. Post-pandemic, I hope we go back to norm and have a lot more opportunities on both sides.
Got it. I think that's really, really right. And I think you both should consider to register that 2 sentence into slogan. It could be a market changer that we can read from Wall Street Journal one day. And with that, I want to thank you for the amazing session. That's a lot of questions. There are a lot of takeaway, a lot of thought sharing. I think we have a lot of great questions from our audience. With that, I want to hand over to Jia. Maybe we can share some of the questions, and then we can leverage the brightness and smartship from Mark and Yang to answer.
Yeah, happy to. And but thank you again, Mark. Can you guys hear me? Yeah. So thank you again, Mark and EM, for joining us tonight, and even just being on the stage and the shadow through the whole panel is quite informative as someone who's not directly from FinTech. And thank you again for Sheng to moderate and also curating the whole session. Those topics are really interesting, and I can see a lot of questions popping up. So we actually got a lot of questions we have received more than 20, 30 during the registration. And also there's a few questions popping up in the live window right now. So we're not going to have time probably going over everyone. So I'm going to pick a few and then switch to them. And also Sam, feel free to join because you also have rich experience in FinTech and finance. So I surely don't want to miss your opinion on that as well. So actually going to a Q&A session. First one, actually most worth it, is a question directly addressed to Yam, but Mark and Sam, feel free to join if you have something to add on. So question from Fred is, Yam, my understanding that E-Trade, TD Ameritrade, Swap are more brokerage than custodians. For traditional custodians like BNY Mellon, JP Morgan, State Street, what do you see their challenges and opportunities?
Got it, right. So probably have to clarify a little bit. E-Trade, TD or Ameritrade, Schwab, they are technically not custodian per se. Well, Schwab is different because Schwab has its own bank holding company, but TD, like for example, is a brokerage firm, but they are clearing firms. They can take customers' assets, but the asset needs to be deposited maybe at another bank. But so technically, E-Trade, TD, Ameritrade, Schwab are all custodians for retail clients and for institutional clients who have brokerage accounts with these firms. On the other hand, BNY Mellon, JP Morgan, State Street, they are considered as bank holding companies. They are, in everybody's eye, more traditional custodians. So we're talking about custodians for different customers. But in the end, like I said, these custodians or brokerage firms, they all need to make revenue. And the revenue streams, number one, used to be commission, especially for TD, Ameritrade, Schwab, especially at TD, 1/3 of the revenue came from commission, trading-based business, but now it's gone. That's why Schwab initiated the merger acquisition to TD, and TD was acquired by Schwab. But Schwab is a different picture. Schwab has only probably 10% income from commission-based business. Schwab right now is more like a bank holding company and also asset management firm. 50% of the income from fee-based business, mutual fund, ETFs, asset management business. But in the end, another 1/3 of the portion that Schwab makes from money market fund spread, interest-based income. Now that is gone also. So going forward, no matter you will be a Mellon or JP Morgan, State Street, or Schwab or E-Trade, now it's part of Morgan Stanley. The key is scale. You don't have scale, you cannot make a reasonable revenue based on a thin profit margin. That's why Morgan Stanley bought E-Trade. That's why Schwab bought TD Ameritrade. That's why Goldman Sachs bought Folio Investing. They all try to get access to more stable, scaled assets, which can generate more revenue going forward. Maybe they should use Yieldx going forward to manage cash flow better. But yeah, that's the challenges. Opportunity is just buy more assets. it's hard. It's natural. It's hard to naturally grow assets these days for big firms. They just have to go buy. So you could start a firm which targeting at a small segmentation and get bought out by these big firms. Could be a good opportunity for everybody trying to start a business here.
Yeah, totally. I think Mark, you might want to comment a lot on that angle, but I kind of really want to jump in and talk about what Yang just mentioned here. There are a lot of M&A going on the market. I think there's some echo voice. Maybe Jie, you can mute. I just think here. I think that. Well, never mind. So I think the key thing here is that many big firms are trying to build an ecosystem rather than a standalone product. And a lot of time they have to do that through M&A because that's a quicker way to attract the product rather than build something from scratch. So we definitely see a lot of M&A going on in the market, and that's a sign that a lot of traditional financial companies value FinTech segment more and more because they have to survive the market using all those new technology and new idea. So with that, I will hand over to Mark. I know you have some idea to share.
So the whole ecosystem concept, I think, really stuck out to me. I do think that is a very important concept to have. And if you are a 1 year old, 1 year plus company like us, how do you think about creating an ecosystem? Like obviously we're not in a position to do M&A activities, at 1 year old. I think there's many ways you can tackle that problem. So I'll give you a specific example of what we're doing, which is something we call open analytics. And that means, open source analytics platform. So we're not going to pretend that we are the best in modeling portfolio risk. We're not going to be we're not the best at analyzing muni bond liquidity or corporate bond liquidity or things like that, right? But there's many startups out there that are attempting to do many of these things, and the ecosystem we're looking to build is where we partner with a lot of such companies, where we figure out the synergies and what we're offering and what they're offering, and then we can quickly build to a point where we support a large number of asset classes, a large number of all types of analyses, right? Traditional credit analyses, machine learning based analyses, alternative data sources, where we are able to sort of just curate the experience, but partner really with a large number of such analytics providers, and that's how I think you try to create an ecosystem without necessarily doing an M&A.
Great, thank you all of you guys for input. I think that's definitely an interesting question, and I really see like Fred saying great thanks to Yang for commenting clarification. So thank you guys again for bringing great information to that. And to move forward, next question I'd like to bring up actually to all of you is, how do you guys think that how has remote work due to COVID shaped the competitive landscape? Does a certain type of company benefit from this environment the most? Yeah, feel free to take whoever when you get ready.
Can you repeat the question again? That's the excuse I use every time I don't have an answer yet.
Yeah, no problem. So I think the question, let me rephrase it a little better. I think I probably understand Joshua's point of view. So I think in the FinTech space, how has the remote work due to the COVID that shaped the whole competitive landscape? Is there any like certain type of company that benefit from such kind of remote work environment the most?
I guess we have to define what do you mean by benefit, but maybe it's hard to, because right now it's probably 6 months after the peak of pandemic, right? I think everybody right now kind of is so adjusted working from home. But if we talk about benefit from an investment perspective, we see, hey, which stock will go, we will kind of grow like exponentially because of the pandemic. That's hard to tell. I think every firm right now is trying to adjust to the post-pandemic. including the employees, including the way that they operate the business, and also partnership with different firms and communicating with partners outside the U.S. I mean, there's one big challenge we're facing right now, because I used to travel like 5 times per year between China and U.S. I can't do that. I cannot do that anymore. And these partnerships in Asia, they want to meet you in person. I think in terms of benefiting, it's hard to tell, but that's just my takeaway.
I know, Mark, you are still thinking, so I can jump in to save you. I think really close to our life, there are a few segments in the fintech industry going to benefit from that. I think one is mobile payment. If you experience that before, if you go to Starbucks, people use credit card, people use cash, people use a lot of different combination of payment. And because of COVID and the pandemic, there is a stronger push for the whole industry to roll up to mobile payment. People are using Apple Pay more frequently because that way they can limit their touch point to get access to the virus. That's one thing. And another thing is definitely about digital or virtual settlement. Like I mentioned, in real estate, and even house showing. If you renter or house buyer, nowadays you probably see more virtual open house compared to the past. There are a lot of new way being created or being advanced in order to face the new reality. And I think those gonna be angle that they're trying to adjust the pain point of the customer, and they can potentially win big in this tough environment. With that, Mark.
Nothing to add. I think you almost covered it. I mean, it's all the things that we traditionally would have to do by getting out of our house, and we can do now from our home, right? InsurTech is a big, I guess, trendy topic within FinTech. So, getting an insurance policy for, some specific need without having to call an insurance broker or an insurance company, doing it on your phone, being able to compare multiple quotes and all that stuff. So yeah, I think it's all of those things that that you're able to do from your home that you weren't able to do before.
Great, thank you guys. Thank you so much for answering the question, and thank you for for breaking through the question. I know it was kind of maybe broad in the beginning, but thank you for narrowing down the scope. So moving forward, I probably wanna give more time to those questions audiences submit before the event. Just we have probably about 10 to 15 minutes left till wrap up the event. So next question will be actually quite interesting. So actually to all of you, that is, what's your thought on the future of alternative market data providers?
I think there's a huge market for it. I'm gonna tie this back to just the fintech services industry, or the fintech industry in general. When I first started in the industry, we still lived in a sort of, best of breed type of system, where you would go to one provider for one thing, another provider for another thing, and then you spend most of your time trying to integrate and keep them connected, right? And then we had the advent of a one-stop shop where you go to one big provider, like, for example, a BlackRock Aladdin, where you can do 90% of what you need to do on one platform, and then you go somewhere else for the remaining 10%. I think we're moving back to this world where the barriers of entry of onboarding a new service provider have become so low, with APIs and again, cloud-based technology, that it's becoming easier and easier to go back to a best of breed system, and integration has become, much easier. So I view the future of fintech as one where we're going to have more and more such smaller niche players that are really good at what they do. I mentioned open analytics at YieldX, where we're working with some of these players in very specialized analyses they're doing, applying particularly trained machine learning models for a particular sector of the market, which is so specialized that it's hard to necessarily apply those same models on a different sector of the market. These are the type of data providers that I think will really come into into play when it becomes so easy to integrate these guys, and there's so much exposure that they can get from being onboarded on like an open analytics platform, for example. That I think we're going to see more and more alternative data providers, and I know I certainly will be looking for more and more alternative data providers to broaden the value of our open analytics platform.
Yep. Jan, do you want to?
Yeah, I agree. I think it's huge. The alternative data, it's a frequently discussed topic among investment world or operational firms. I mean, the traditional data is just not enough for example, investment making decision, right? We're trying to use these traditional factors, for example, value, momentum, quality, low vol. It's been there for like half century. But hey, can those factors keep performing like it was performed in the last 20 years? In the next 20 years, there's a big question. Alternative data is going to play an important role going forward for sure. And I think personally, well, on the other hand, personally, I feel there's so much data. I mean, you can mine a lot of data out, and just by using open API, open source platforms, you just have to understand the rationale behind the data. I mean, yeah, you could use, like I was joking, you could use SunSpot to predict the stock return. How is that going to work? When you have so much traditional alternative data, make sure you understand the business rationale behind data. But that's always the key, not just from an investment perspective, but also from talking to your clients, talking to your investors.
Totally. I think I have a few points to add. First, is there a few trends we're seeing in this market today, either from FinTech or the whole market? First is that our world are getting more and more data-ized. That means a lot of data, originally they are not data, are getting to be data. So from that angle, definitely a lot of trend, a lot of like business opportunity. I know there are a lot of front runners trying to win additional business in that angle. So that's one thing. And another thing is that we're pointing back to what Jan pointed out. To one point, we will have a lot of data and too much data to one point. How do we use data rather than being dominated by the data? That's really a question. It's the people who can use the data smartly and leverage both traditional and alternative data in a structured way. Those are the people who can win, rather than just following anything specifically or just being overwhelmed by all the data.
Great, awesome. Thank you guys all for the input. I actually a very interesting question as well. So thank you. That was quite informative in that point of view. And given the time, I probably will give the time to the last question before we wrap up tonight's event. I know we got so many questions lined up, but unfortunately, so the last question, it will be more kind of open-ended, which also quite demand among the audience is how to get a job in the FinTech space. So I guess the question, because I think certain percentage of the audience, they are recent grad students, or people in from traditional financial firms, right, looking to pivot and position themselves in FinTech as an trend come up. So I think you guys' experience definitely can be a great example to share that, like how you guys get started in FinTech space and how to get a job on pivoting the point. Yeah.
Well, I can start that, and our amazing industry leader and CEOs can share their opinion in a bit, because they might represent their company to share hiring potential opinion. For myself, I think it's really not about how to break into FinTech. It's about how to break into any industry you want. You want to be a sponge and you want to keep learning. And I think it's quite important to the FinTech industry, because that's an industry that it requires a lot of aggregation on the skill set and keep learning on what the market is changing, both from technology and financial perspective. That's the way your product, your company, and your team can survive. Because one team survive today giving fintech change or technology change might be no longer needed in 2 years or even say 6 months. So how to build skill set, be a sponge, keep learning, I think that's the critical part, especially for new grad. You want to learn. And well, there are a few technical ways. I don't need to mention like learn Python or learn some like coding language, because they really become a language to be spoken in fintech company rather than a traditional like language.
Yeah, I would agree. Be proactive. As Sheng said, be a sponge. Learn and demonstrate what you've learned. I think the number one thing is companies want to be lean. They don't really need to hire someone that's very specialized in, one thing and one thing only. Maybe it's just helpful to share. For me personally, a day in the life. I could be, I could be looking at a factor risk model, traditional quantitative research like type of thing in the day. And then, today we had something going on with our cloud cluster. So I switched gears to looking at our Kubernetes cluster, figuring out, what's driving the slowness or whatever. And then afterwards I could switch gears to looking at a data loader and some ETL process. So those are probably at a large company, potentially, separate specialized roles. But, think of yourself as, someone that's willing to learn, many different things and able to satisfy many different roles at once.
I think that, Sheng and Mark touched on most of the points that I think to me is, well, I don't see fintech as a specific industry really, because it's all about using technology to empower the finance industry. If you go to like a big bank like JP Morgan or Capital One, they claim themselves as a fintech firm these days, right? Well, I use claim, but probably they are.
Well, solely technology firm.
Right. Don't quote me on that. Well, if you go to smaller firms like us, we are, for example, Train Firm is one of the subsidiaries of Tiger Brokers. Tiger Brokers has like 600 employees around the globe, but that's a different kind of story. Just make sure you really find something you like. And I don't have anything else to add, but except just telling you, hey, just don't try to find a specific like role, but just get into a big platform, especially if you're kind of fresh graduate, go to a bigger firm. If I were you, go to a bigger firm, try there for a couple of years, and maybe go to BlackRock, kind of exposed to different teams, try to see how to interactive with different groups, cross culture, and then go to a smaller firm if you can handle a bigger risk. Of course, could be a bigger reward, but it's no guarantee.
Totally. One more sentence to add: don't be afraid. Especially when you're younger and new grad, don't be afraid. Where your imagination is, go ahead and do it, and you'll be there.
I wish you could tell me 10 years ago. I was scared.
Cool.
Oh, awesome. Well, I really love it. And thank you again. Well, as we're heading to 9:30, well, unfortunately, but I really thank you everyone here, and also really love the one sentence quote from Mark and Yang. Really nice idea from Sam. I really love that. I'm pretty sure our marketing team will quote that in our coming recap email. So we'll see that. Stay tuned for that. Exactly. Yeah. So thank you again for Mark and Yang joining us. And if you guys in front of the screen interested in learning more about their company and the product building, or feel free to reach out to us, or as well as you can find them through their website. Their information is on the event page as well as in follow-up. And thank you again for joining as a speaker as well as a moderator, having a great session to have you here and great support. Really appreciate that. And thank you again for all those in front of the screen right now, especially given the backdrop of the election. Don't worry, I just checked again. They are still counting, so we didn't miss much. It was a great session here, so we can go back to that waiting for that. And yeah, so we'll have a great night, and I hope you guys enjoyed that. And feel free to follow up to our social media newsletter. And stay tuned for our recap email if you want to get a more summary from what's going on happen tonight, just in case you missed the big chapter of that. And as always, the event will be available for replay if you sign up. So stay tuned for that as well. So again, thank you everyone, and it's great to have you. And thank you again to Sam, Mark, and Yang. Hope you guys enjoy as well. We'll have a good night, and till next time.
Take care.
You.
With everybody.
Thank you. Bye.
Bye.